Hello, everybody. It is Halloween weekend, and we are recording the Plus3 Futures and Commodities show. My name is Ben Maldonado. As always, I am here with my partner, Barrie Hederachi. Hey, Barrie, how you doing? You going to have tricks or treats this year?
Well, the market's got plenty of tricks, so I guess I got tricks. So
you got to balance it out.
We got to balance it out.
Yeah, well, things are certainly moving. We got a lot of things to talk about this week, so let's dive right into the charts here. Bitcoin is doing an interesting move here. There's a couple different ways you can interpret the chart, and you and I were talking about this earlier this week when we put in this high, that it's possible we might have a false break there. We've got a completed wave by our geometry up here at the high. We've pulled back. If we got stuck under this full square, it'd be a lot easier to say, hey, watch out, this is a false break, be careful. But we came down, spent 3 days probing underneath there, and now we're back above the square. So it looks to me like the odds favor right now that we're not going to plunge. We did complete something here. It's not a devastating false break reversal. It's just something ended. And now we're going to either burn off time with some chop or sideways before the next leg up. Now, if we get caught under this full square, we'll have to reassess and say, is there a deeper correction or more damage coming? Where are you? Yeah, where are you on this one?
Well, I think I'm on the 60,000. I think that's the key level to hold. Like you say, if we can manage above it, I think a little spike below is not a problem. But if we can hold above it, I think we could probably go test the half square above. And but if we get stuck below 60,000 or that your square, what's it, 59,500 or so.
Mm-hmm.
Then I think we have to take into account that, there's a false break in place and maybe at least visit the half square down below.
Sure.
Yeah, that's
kind of all those possibilities are on the table. That's for sure.
And we have a level, right? So we watch a 60 pivot to see which way the market might be going. So.
Absolutely. And as always, with all these levels, they are on our spreadsheet that we share a link to when we post the link to the weekly video. So make sure you, if you're interested in seeing the levels and seeing if they're updated during the week, you just check in on that spreadsheet and you'll be sure and get those. Also, as we mentioned last week, likes, subscribes, and views.
Click that little bell.
Click the bell. The bell means something. We're learning all about this about YouTube. So if you like the content and you appreciate the information we're putting out, please do us a favor and click the likes and pass the videos around and click the bell and all the other things that YouTube wants you to do to show that it's appreciated content. All right, the commercial's over. Let's dive into the charts. There's the ES at new all-time highs.
Wouldn't you know it? Look at that.
Yeah. Well.
All right. So if you guys have been watching for the last few weeks or months, then you're following the story. We try to cover these markets sort of like a story. So every week we're picking up where we left off. And last week, we looked at 45.60 being a key level to watch and sort of a balance point, meaning looking for strength above it and weakness below that. So we kind of, we had that. It's hard to kind of tell in the daily, but I wanted to show you a 4-hour chart so you can see clearly how that level worked out. It was actually quite good. So here's 45.60. That's a blue dotted line. And you can see how we, straddled it pretty much the whole week. Right, Ben?
Yeah, I mean, Barrie, that's a perfect example where you can show what we talk about, getting on top and then staying on top, getting on top, staying on top.
Yeah, that's what I really wanted. That's a good point, and that's kind of what I wanted to cover. So you can see how, first we were above it, one quick spike looks like a little bit of a flush, making higher lows. And you can see how it broke exactly when it came to that level, right? It didn't break before that. You can see that big bar only came right after we broke it, right? Just like, the acceleration started right after we broke these past two bars before the break bar. And then we pulled back right to it and zoom. So when we say hold above, that's what we're talking about, like this point here. If you waited all week for that, you got the biggest part of the trade move for the week on that leg, and also at the break of this. So anyway, just to say that the level worked out quite well.
Hey, Barrie, I know most people have entry levels, but can you show them for a second your method of like entering when we tested that level and then broke through? How would you get into that kind of trade?
Well, what I normally do is we watch, we post these fuse lines on Twitter, and we follow the shorter cycles. So I watch the 30-minute, and I also watch the fuse lines that we use, and also that we post on a 5-minute chart, and I use that to sort of get clicked into the trade in the direction that I want to go. And the reason we use the fuse lines is because it really helps you have a line in the sand, and you know exactly where your risk should be or should not be. And that helps you always control the risk, no matter what the market condition is. So I sort of dial in, I zoom in when it's time to enter, and the rest of the time we just watch these bigger lines on higher time frames. That helps.
But let's say if someone was trading this 4 hour, you essentially just draw yourself a little trend line, and then once we break it and hold that 45.60 level, you can enter the trade, correct?
Well, it sounds easy on paper.
Right.
It's really never that easy, but that's why you want, we're not telling you exactly what to do, but basically you should have some kind of a setup, right? If you're day trading, you need to have some kind of a setup or pattern or something that triggers you into a trade. And then you need to have trade management, and then also something to trigger you out of the trade. So you need to have those things, because we're not actually giving those, or we're not talking about those. So once you have, and there are plenty of ways to do that. So once you have a way to, a pattern that you say, okay, I want to get triggered, pulled into the trade, or clicked into the trade, or clicked out of the trade. Once you have that, then you can overlay the levels that we use, and then exactly which setups to take, because we know a buy signal above 45.60, for example, should work out, has a higher probability of working out in your favor than if you were below that, right? Or a sell signal below versus a sell signal above. So it's just a matter of getting used to working with levels, and then having a way to enter the trade, because just a level by itself is just a level. It's just another price level. And that's how I do it. But,
excellent.
But there are lots of ways to skin this thing. So we had the 45.60 for next week. I think long as we hold that, we're going to continue to use that 45.60. Long as we are able to hold that, I think the markets should be bullish. And if we happen to break that, I think we have to really be careful and tread carefully. It's giving enough breathing room at this point, about 40 points. So there's plenty of room there to pull back. But it's also, we talked about last week, and if you guys didn't catch it, maybe you can watch last week's episode. We talked about the squares that we were seeing and the patterns that we were seeing at this high. And now we also have a slightly new high with plenty of divergences in number of indicators showing strong divergence. So, these are times to keep an eye out, not just because of the divergence, but also because we had some squares and cycles timing out. And Ben, I don't know if you saw that, but I posted a chart of this this square coming off of 2020 high And just to make it a quick reference to that, you can see how from the high to the low was roughly 144 degrees, and it went a little bit about an eighth more than that. And if you go up from that high, 144, well, we're right there. And an eighth more than that would be right around 46.35, right? So that would equal the move from high to low versus high to high. And well, I just, not that it means anything necessarily, but these are important balance points to watch. Sometimes when you have these things, the market will pull back and rebalance itself and start something new, because that would end some kind of a balance, especially price. We had 144 degrees down versus 144 degrees up. So that's kind of happening, right? We're kind of watching that. Let's see if anything comes of it. So for next week, watch 45.60 being key support, and 46, let's say 46.33 being resistance for now. And we'll see how it goes. But this bracket is really important. We could consolidate in between, but if the 45.60 goes, we have to be a little bit careful, because it could end up becoming a longer sort of a correction. Mainly because it's funny how that 45.60 is exactly the 144 degrees up from that high. That's not how it was derived, but isn't that interesting how it lines up with the 144 that happens to be there?
I love that. I think that whenever that happens in our work, where you'll get a number and then I'll get a number, and we're coming at it from two totally different methodologies, it just gives me much more confidence that it's something significant.
And the other interesting thing is, if you go off the recent last low, you can see how the 50% of the core was also 45.60, right? Yeah. So you can see that's why it's a key level to watch next week, because if we can't make it above that half square, there's not a good chance of it going higher for the full square. So we got to watch this area here.
It's also the area of your August high.
Yes, that's also there.
So there's a lot of confluence there.
Yeah.
Good number. Good work.
Good number, something worthwhile watching.
Yeah.
And just to look at the weekly, let's see what we have here. Not much other than a rocketing market, right?
Right.
Looking at the weekly, it's such a.
But look at how that beautiful half square picked up that low. I mean, that's just
right there.
Fantastic. Yeah.
And we talked about that. We talked about that at the time when that low came in. We said, we're looking for support there, and it held it. And anyway, we rallied off of it. So there's room to go. For now, we'll just leave it at that. Fine. So we're looking at bonds here. And last week, we talked about the story so far is basically, we came down into support around 57.16 and the half square coming off the high from July. And we were looking for some kind of a support or counter trend before we turned back down. And it turns out it wasn't a quick counter trend. We've been up above that level for over a week now. So I'm still looking at that area being sort of a test, but I think it's probably this block that we had marked off earlier. It's really going to go up and test that area. That's really where the resistance is, and that's around 162, right? So let's watch that for next week for resistance. And I think if 162 goes, then we could have the trend could have changed in bonds. And we're probably going to go higher, right back into the fray here.
Yeah, back into that box, and maybe even the full square.
Maybe even the full square. So we got to watch 162 next week, see if we can get above that. I don't see how, but we'll see. It'll be a good.
One never knows, right?
One never knows, especially because we have 72 bars. We have a 72 cycle here, high to high.
Yep.
Coming right in there, so it's possible that might hold it. But 162 is the level we're watching for resistance.
Mhm.
next week. And the 160.20, I think we can pretty much ignore because it's sort of we crisscrossed it too much. So
Sure.
we're going with the 162. And looking at the weekly, pretty much the same story. We're looking at this half square around 158.28, so 159, and we're straddling that just perfectly. So it's really hard to tell if it's above it or below it. The key thing is last week we were able to get most of the bar above that level. So, that looks a little bullish, right, Ben?
Yeah, it does. I agree.
It broke that little, we had a little bit of a weekly trend line going, which is easier to see on the, right there. We broke that. So it's looking pretty good, but not out of the woods. So, but 158 is a key level to watch
Mhm.
on the weekly.
I think the devil rules the bonds because it messes with everybody.
It messes with, yeah.
The bulls, the bears, everybody's getting trashed in that market.
Yeah. That's why you really have to wait till these levels get tested and proven, so to speak, right?
Mm-hmm.
Or break through. So, and our favorite this year,
Yeah.
take a look at crude. Now, you guys, if you haven't seen last week's episode, you guys should check last week's because we talked about a couple of important squares that are showing up in crude, and you can see how that came exactly to the square and we backed off for the rest of the week. Now that could have been it. That could have been just the sort of the counter trend that normally comes up after a square. If the market is strong, we should just continue to go higher and take out this high at the square. If we can't do that and we get stuck at the half square, this 85, around 84.50, 85, if we get stuck in here, I'm afraid either we're going to consolidate or we're probably going to do another leg down.
Mm-hmm.
So because of the squares in place. So you got to really watch it here. 84.5 is a key level to watch to see if we can clear it and clear it or not, right? It's do or die here after a square. You don't have a lot of time, room to mess around. And 82 was support. We took it out last week just slightly, but then recovered, fairly quickly in one day. And we had a daily reversal in here. So it's, looking okay. It's not super bad, but the 84.50 needs to be taken out quickly. Otherwise, that means it could be a signal that the price and time actually squared out and it's not stronger than the market. I mean, the market's not as strong as the square and will probably end up below the square. That's my take on the crude daily and crude weekly. Well, this is the other
Similar
story that we talked about last week.
Mm-hmm.
And again, we didn't have a quick turn down, but it did pause it for a bit, right? The March. And so it's still going on. Hasn't gone away. So we got to watch next week and look at the levels that we talked about on the dailies. 84.50 is key next week. And here we have gold. We talked about 1765 being the key level for gold, and that sort of a balance point. We need to bullish above that, bearish below it. But that's within the bigger consolidation that's going on. So this is not running at this point. And we broke the trend line that we had in place, which tells me it's not done consolidating. So we're probably going to continue to chop around and probably bracket it by the highs last week and 1765 to the downside. And for a move to really start, either we're going to have to start at 1765 and start moving higher, taking out 1832, or we're going to get stuck under 1765. Again, that's the key level to watch for next week. And looking at the weekly gold, we drew up this sort of the compression that's happening, right?
Just winding up.
Just winding up. And we also talked about how that can continue forever, although it seems like it has, right?
Yeah.
So Well, we're looking for support along the bottom line, and you guys can probably copy this and resistance up here till we break out. Again, there's really no big sign here other than the fact that we're holding some key support around 1670. And so we're kind of holding the space for now.
You know, in a market like gold, Barry, it's why we do once a month, we go over the monthly charts. And we're not, you know, a lot of people maybe are looking for it this week. We're not going to do them this week because we do have another half session from the futures on Sunday night. So we'll do the monthly review next week, but it helps to zoom out and sort of see where this consolidation lies in the bigger picture.
Right. Very good. So for now, not much. It's all chop chop.
Mm-hmm.
Looking at the dollar, this is the daily dollar chart. And last week we dropped this trend line saying that it was a key area to watch, and also this gray area for support. And you can see how market came down and sort of did a false break, and we reversed hard on Friday. And so I'm expecting we're probably going to hang in that channel for a while, right? I mean, we had a chance to break down, we didn't. So we're probably going to hang out up here. So again, we're still using 93.70 as a key balance point. And long as it's dollars above that, it's in a bullish footing with it shot at 95. Yeah, that's all I got for the dollar. You got anything to add there?
No, I think your trend line was beautiful and perfect, man. It caught the low and sort of captured this chop that we're seeing in the dollar lately.
Right. So, you know, we talk about false breaks. So there's a textbook example of one.
Mm-hmm.
And a fast move following that, right? Just boom. Got all the stops above. So
Classic.
Let's look at the weekly dollar. Pretty much the same story. We dropped that trend line in there last week, and of course the bar came right to it. You know, dollar's not weak, I would say. You know, if it was weak, it would go down to the lower trend line. It really didn't, held it there. So I'm thinking it's probably going to hang out up here a little bit longer. Just watch those levels if you're trading these. And the last chart I got here is the euro.
Holding that full square, isn't it?
Yeah, it's amazing, eh? So first thing is, you know, this 1690 we talked about last week, this level, and you can see we hit that on Thursday and bang, pretty much a mirror image of what happened with the dollar.
Mm-hmm.
And we basically covered the entire range in one day. So that's our bracket. So we have 1559, which is a full square down as support. And it's, you know, it's starting to poke a little bit below that, but that's all right. We're looking for it to, you know, sort of get stuck under that level, if that's the case. And, you know, the 1690 definitely held pretty well right at the upper level. So I'm guessing either we're gonna be chopping around in this bracket, or if we lose this 1559 level, then I would expect the march lower, making the dollar very strong.
Mm-hmm.
And so we'll see how that goes. Anything you want to add here, the dollar or the euro?
No, it looks like they're still range bound until we break one of those important sides, you know.
Right. Now the dollar has a little bit more room, you know, because the upsloping line, you know, it could go up and test a little higher next time around. So we'll see how that goes. Well, that's all I got. Let me put it back to you. Cover the commodities, the grains, and the softs and the metals that you do.
Sure.
Well, another new high.
Yeah, the laggard has caught up, hasn't it?
Yeah.
So this is NQs. Barrie did a really excellent review on the ES. So I just wanted to add a couple of points about NQs. We do have similar divergences on NQs at these highs as Barrie was mentioning on the ES. So it's something we're aware of, and you know, making sure that we look both ways before crossing the street in this market because we could get a pull any time. The interesting thing is we've broken above this half square resistance, which is right in the same area as the previous all-time highs that we had back in August. So that's bullish, right? That's in the 15,750 area. As long as we can stay above that, or if we do on any pullbacks, if we can sit on top of it, it's extremely bullish here. That being said, given the divergences and the cycles and where we are, wouldn't be surprised to see some sort of pullback. So what I've been doing and in my posts on Twitter is basically saying, I'm very interested to see, if support holds on pullbacks, if we get them, if they do, it feels like a very bullish signal to be able to go long this market, into year end or into next year. But we did make new highs. We did push above the half square. So nothing you can say about the market other than it's bullish. Having some caution because of the divergences makes sense at this time. Anything you have to add on NQs? I know you've been looking at some of the components of the NASDAQ 100. Anything else, any insight you got there?
Well, no, I think you covered it in summary without making this too complicated. I think the two things you have to watch, we are making new highs, but we're also sort of in a window with the squares, on the S&P and NASDAQ lining up here along with some cycle dates. So I think next week, be a little cautious on the long side and watch the levels to see that we can hold them. And if we fail, I think that's when the red flag should come up. But if the levels are holding, then I think the upside is wide open.
Agreed.
Mm-hmm. And did you call out that level? I missed it on.
Yes.
Yeah. Okay.
Yeah. So here we've got wheat. We're going to cover the grains. We're going to on the commodities today. We're going to cover the grains. We're going to cover the metals, and we're going to cover energy and one soft. A lot of the commodities, as we've been talking about for the last month or so, are in some sort of consolidation or correction mode. We're coming to the end of that in many markets, the grains being kind of the leader here, some of the metals also showing signs of moving out of these consolidations. So today we're going to highlight a few of these markets and show you why we think they're poised to move higher. Wheat actually, we've been talking about it as being one of the strongest grains and one of the strongest commodities. It made a new high for 2021 this week. Not a lot of commodities can say that. This one did. It's just looking very, very bullish, and we are in a place where the potential for upside acceleration is there. In the Elliott wave parlance, the wave 3 possibilities are higher than normal right now for this commodity. There is a crop report on November 9th. I don't know if that's going to be the trigger or if we're going to move beforehand. It's just this is one of the groups that I've been telling Barrie for the last couple of weeks. Every morning or on a lot of mornings, you'll see weakness in it, and then the rest of the day they're buying it up, and it ends up, from being down big to unchanged or up a little or flat. And that's generally a good sign of, accumulation from interested parties that have enough money to move markets. So wheat's looking good.
Hey, Ben, what's the level above that half square that you have there?
Yeah, the half square is at 789.
Mm-hmm. I'm thinking, it looks like to me, like if we can clear that half square, then we're free and open. It'll really open it up then. And the reason I say that, I just noticed how the high in April, if you take that high and draw a line from that to the high in August, we sort of have a, potential triple tap on that line.
Yep.
Right there. So just to be clear, I think if we can clear up that half square, we're in good shape.
Yeah. And that's where I think we get the acceleration point I'm talking about, where the cards are kind of on the table for the possibility here. And we're seeing, this series of higher lows and pushes. And again, I always say, watch when it gets above a square. If it can hold that square on these pullbacks, which we did, no closes were below it. They could only push slightly below it. It's a sign of strength.
Mm-hmm.
So we break out. That was a good eye on the trend line. We break out of that trend line, clear this half square. I think, full square is not out of the question on an accelerated move. And that's in the 1829, 830, 829 area.
Another
So
triangle. Yeah.
Yep, that's wheat. Now let's look at corn. Corn is a little behind wheat, being that it had a deeper correction, as you can see here, much deeper correction than wheat. But as you can also see here, it's beginning to accelerate to the upside. We called out this low, saying that this looked like a flush. This looked like, an area where, provided we saw good price action afterwards, we could say, hey, this looks like a pretty good low. Well, we've had a push out of here. We had a pullback that gave us a higher low. And now we've had the next wave up that's given us a higher high. Also, importantly, we've sat on top of this half square after getting above it in that 555 area. This pullback just got a tick or two below, and then it reversed again. So this is another commodity that appears to be in a position where we could catch an accelerated move to the upside. The next target here is the full square, which is around 590. If we can get above that, you can see that's the old high from August. But if we can get above that and sit on that, then we're looking at the half square and the downtrend line from the major highs in May.
And that half square we're right above now is also, that looks really important.
Yeah, 555 area.
Right.
And these levels are on the spreadsheet, as we talked about. But, we tested it on Thursday and then turned around and closed the week on the highs, which is also very bullish. So corn looks good, not as strong as wheat, but certainly the price action coming out of this low that we identified looks really, really good. The higher lows, higher highs. That's what you want to see in a bull market. Next is soybeans. This is sort of the ugly stepsister, I guess you could call it, the grains right now. It's a little behind the others, but it is starting to do things that you want to see a market do when you've made a low and you're beginning to sort of build the case for higher prices. The most important things on this chart, I think, are the low came in on a half square to the tick, right? They came down, flushed, and then immediately reversed. And all week, while it's not been as strong as corn or as strong as wheat, for 3 of the 5 days of the week, once we got above this square, they tested the square, they tested the square, they tested the square, and every time we held. So if this is looking like it's bullish, like I think it is, we should see some more movement this week to the upside, convincingly taking out these previous highs here, and then hopefully going up here and testing this half square in the 1296, 1297 area. So soybeans is definitely the weakest of the 3, but as you can see from price action and where it's finding support, those are bullish signs in beans. Any thoughts on beans, Barrie?
Yeah, I think you called it. As long as that square is held, I think it has a good foundation to work with.
Yeah, it's building. It's got work to do, but it's building.
Mm-hmm.
Let's jump to the metals, and we'll start with gold. Barrie covered gold pretty well, so I'm not going to go in depth, but I did want to share an observation I had picked up off of the chart. In February, before February, gold was basically a mild sort of, sideways correction off that spike high it made last August. But then in February, it lost this full square here in the 1834, 1835 range. And since that time, with 2 deviations, we've essentially been trading in a range for 8 months from 1835 to this 1743, 1744 range. The deviations were in March and April, we went below. In May and June, we went above. The rest of the time, we've been in this really tight range of, bouncing from the half square to the full square, half square to the full square.
Mhm.
You tried again this in late summer, early fall to bust down out of here. And this time we could only spend a couple days below. And it was right back into the square, testing up here, came down, and again, a couple days below. Now we're back up, smack in the middle. To me, this is showing that energy is building, it's coiling up. We're starting to see higher lows here after we got this flush. We got this higher low. Now I'm interested to see on this pullback, do we get another higher low? Can we not make it down to the full, all the way to the half square? If so, it's showing more strength. And so I think, given the bigger picture, like we'll look at in the monthlies next week, this thing is building and sort of on the precipice of a strong breakout higher. Here's gold's cousin, silver. Let's check out silver. Silver's actually been a little stronger coming out of this that spike low we saw in September. And also you can see from the high in August, silver's been more of a sideways correction than gold. Gold is a little more sharper in terms of the move down. But with silver, we've had this sideways correction. We got our third hit on Friday on this trend line off that low. So we had a low, a high, a higher low, pushed above the square, which was interesting, went to the half square, and now we're coming down. If we can hold the trend line, obviously that's bullish, but more importantly for me is if we can stay on top of this square, silver is ready to go. It looks bullish. It looks like if we can make this higher low, the next key point is this half square, which is in the 25 area. We break out of 25, then it's up and away in silver. Anything you have to add on silver?
Yeah, I think that lower square is a key here. As long as we can hold that, we're in good shape. So,
agreed.
Yep. And we broke the down angle. I mean, everything's in place.
Here's another one, copper. We talked about copper a few weeks ago. We got this big breakout. We basically went square, square. Now we're back to this square. So we're testing this breakout level. We're testing this breakout area. As long as copper can hold this 433 area, which it did on Friday, I think we're bullish for another move higher in copper. I really like the price action that we've seen. We got this sharp pullback, but it found support where it needed to remain bullish. So as long as this full square holds, I'm still of the mind that we're going to see the next move. We're going to see, all-time highs in copper. What are your thoughts on copper?
My thoughts are, man, I don't know how people can trade without squares. I'd be so lost. I mean, just looking at that copper chart without any boundaries, can you imagine? It's like, and it frames it so well, right? Once you have the square overlaid, it's amazing.
It gives order to the chaos, doesn't it?
Yeah, definitely. That certainly does. So I think that square level is key. And it really needs to hold if this is going to fly. I mean, it can come a little bit below that, but not by much. We certainly can't get stuck under it at this point.
Absolutely.
Hold above it, I think it's bullish for sure. Right, and the pattern that tells you that, right? That's
right. And if we get stuck under it, we have bigger issues because then we've got a lower high.
Yeah.
And if you're a bull, you're hoping it just means consolidation and chop and not, going down and doing a huge ABCD, which would make new lows for this move. So that is a very, very important level. Switching over to energy, Barrie did a great job covering crude. Just wanted to mention a couple things here. Crude looks to me like we're going to be in some sort of chop and consolidation now. And that's, a reaction off of his timing squares and some of the things he showed. The key levels are this 84.14 area, which is my half square. We get above that and settle above that, we should have new highs in for this leg on crude. If we lose the full square, which is around 79.60, then we're in for something deeper and something bigger from a correction standpoint. Still bullish on crude. As long as we hold this full square, we know we have the odds in our favor looking for higher prices. The darling of the year, trade of the year for us has been nat gas. And I've kind of left nat gas off this review for a while because we made that big high and I said, okay, we got to digest this move and correct a little bit and sort of see what comes next. Well, it's becoming clearer what we're doing now. And that is we're doing some sort of very large, high level consolidation in the form of a triangle, big volatility and really going nowhere. So we're just kind of burning off time. I think after a move like we've seen, that's really bullish. If you can go from 3 to 6 and then just go sideways for a while, that's really a sign of, there's people not really interested in dumping this thing. There's, just sort of short-term traders getting in and out, and there's a bid under it. So I want to put nat gas back on everyone's radar. We're in the triangle. I'm looking to add to the position on holding supports and when supports hold. The other thing that Barrie pointed out when we were talking and reviewing this one, look at where the low on Friday was. Just enough to fill the gap that we had earlier in the week, the big up gap. On lower time frames, you can see higher lows. You can see the sort of the buyers stepping up at higher prices here on weakness. I think it's just a matter of time before nat gas breaks out of this big daily triangle. And I think, higher prices are certainly in the cards where we'd go up into, another full square up, which is in the $7-8 gas range. So that's what we're looking for in nat gas. Anything you have to add in nat gas, Barrie?
No, I think you got it covered pretty well.
Okay. And lastly, we're going to end up with one of the softs, coffee.
Mm-hmm.
Coffee is really interesting. We caught this move over the summer, this big move up. And since that high, we've been seeing this triangle trace out. And one of the things I was talking with Barrie, and I hope you all are noticing it, a lot of these commodities have these similar price patterns, right? We get these giant moves, then they triangulate, and then they break out getting ready for the next move. Well, coffee is doing sort of a double triangle here. And I put the dotted lines here to show you the smaller triangle it's in, all the while making higher lows accompanied by higher highs, off of this low here.
Mm-hmm.
But I feel like this is coiling and curling up, getting ready to do a breakout. I know off of the a daily triangle that we broke, this initial triangle, our target's like up around 235, 234, 235 area, which is like right in here, just above that full square.
Mm-hmm.
So that's the target I'm looking at on coffee. Just waiting for the signal to come, but note that this is on the radar. It's coiling up. It looks like we're set to move higher here. Any comments on coffee?
Well, I'm waiting. So it's taking its time, right? But I think it's like you said, it's a very bullish pattern. So let's see how it holds up. It's nice we have the triangle, so we have a nice boundary set there. We'll see how it works out.
Yeah, and similar to this big triangle that we saw at first on that breakout, see how that whole pattern was above that previous high?
Yep.
If you look at this one, where the high of that triangle right there is, most of this price action in this triangle is now above that high, that September high.
And so it's compressed fairly well, right? Between that line and the half square, it's really tightening up. And
right.
So.
And we know there's not a lot of time left for this triangle either, just because we're getting towards the apex. So that's why I wanted to put this on the radar. I think the break is coming. I think odds favor the break to be higher, and we're looking to take advantage of that. And so that's it from commodity land. Everything else that we didn't cover is either consolidating or correcting, and not in a position where we feel like we need to highlight it on the show this week. But this week should be another big week. We got some cycles at the end of the week. You got the Fed midweek. So there should be sufficient action for us.
Well, that's a good wrap.
Okay. We will see you all next week. Have a great week trading. Use the levels. Make sure you give us likes and hit the bell and subscribe on the video if you like the content. And we will post the link to the spreadsheet when we post a link to this week's video. Have a great week, everybody.
Thanks, Ben. Have a good week.
Bye-bye.